Welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and I teach my proprietary Safe Wheel options trade for free. Now currently my Safe Wheel system year to date, it's only been about a month, is down about 2.9%. Please type in the chat that you can hear me okay. I want to make sure my audio is good, and also post any questions you might have. I want to make sure I get to all of your questions before I end the broadcast. So you want to start posting those questions now. Okay, I'm going to get into it. Now, yesterday I was on the live stream, but I didn't have access to, all the information and thank you, Walter, you can hear me. My bandwidth, I didn't have the bandwidth to go ahead and share my screen and all that kind of stuff. So I just didn't trade yesterday. Now, as far as the earnings edge, let's get into that. What happened last week? Well, last week was not too good. Took $672 loss. I remember when I went to exit this trade, I was down about $150. And by the time I got out, I was just chasing it. Sometimes that happens. But down $672. Now, on the earnings edge, my overall record is 27 wins, 12 losses, and 3 break-evens. Now, since I established my new exit criteria, I'm 6 wins and 5 losses. And my average loss is now up a little higher, minus $282. And my average win is $966. And that's since I've kind of tweaked this system. And I kind of have another announcement to make. And that is that I am strongly considering making a course out of the earnings edge. In other words, revealing what I'm doing behind the scenes so anybody can do it. I wanted to see if you guys had any take on that. Let me know in the comments what you think about that. Now, for 2022, this earnings edge system did about 63%. And currently, after this last trade, year to date, been about a month, down about 5.3%. So you can see my P&L right here, $7,686. Started this account with $5,000. All right, let's get into the Premier Level 5. So on the Premier Level 5, let's see here. We trade the ES. You can see my account balance, $33,273. Now we started this year with $33,583, so we're down a little bit year to date. But in 2022, we did about 15% annualized with about a 4% maximum drawdown. And the S&P was down 20% with a 22% max drawdown during that same time period. Well, let's talk about 2023. It's only been about a month, so the S&P is up 7%. And the Premier Level 5 is down 1%. So you can see that we're underperforming in the bull market. When you get that serious bull market, we're going to underperform the market, but we're not necessarily going to lose money. Like, we're still going to hang in there or make a little bit of money. But then when you get into those sideways markets, we're going to make money where the market's not going up. Or the grind down market like 2022, where we did 15% annualized and the market was down 20%. So we're going to outperform. And then in a crash market, we're going to vastly outperform. So what'll happen is, let's just say that this particular year, 2023, that the S&P is up, I don't know, let's say 18%. That doesn't mean that the Premier Level 5 is not going to do, somewhere between 12 and 18%, because there's going to be those sideways markets, those grind down markets, and possibly even a crash market in there. Even if the market's up 18% at the end of the year, there's going to be those different market types. Those occurrences are going to happen. And so that's when this system outperforms, and therefore it's easily can keep up with the market, even in the bull markets. Okay, so the safe wheel. Let's talk about the safe wheel. Okay, something interesting happened with Uber. Remember, I had that long call. I think it was at 33 or 33.50. And I was doing a lot of stuff, and I was kind of communicating with a lot of people, I was kind of busy, and I closed out my long call. What I did was I accidentally sold a call in another account of mine, which is kind of crazy. So that particular account actually kind of lost like 60 bucks, but I ended up being long. Um, I ended up being long Uber yesterday when Uber went up really high, and I was able to sell it and actually make money off of that. So in other words, I didn't really get rid of that call on Friday. I actually got rid of it on Monday accidentally, and it actually worked out in my favor. Could have went against me, but these little type of things, they can happen. I've got multiple accounts, and it's kind of weird. I'm just I don't understand how that happened to me, but I guess it happens sometimes. So I went in to sell that call, and I sold it within a different account than this one. But anyways, I got out of there as soon as I figured that out. I just closed everything, and we're relatively still, it's not that much different, the account overall. But if you have any questions about that, I'll be happy to answer them. Okay, so let's look at it from what do we do next. Um, Remember that I was assigned Uber stock, and then I sold a covered call. I wish I would have went out of the money with that call. I know that Will said you should go out of the money with it, and I went to at the money, so I didn't make as much. But got called away from my shares, and so my call obviously expired, and then my shares got taken away, and um, and then I sold that long call, of course, and then now I'm just stuck. I'm just left with, I should say, this long hedge, this put hedge. So in essence, I can start over, and I can use any stock I want at this point. I can go to a different underlying or do whatever I want to do. But I'm going to stay with Uber. So what I need to do is realize, okay, I'm with Uber. So is my put hedge in the right spot? Well, what I need to do is figure out what Uber's trading for. It's trading for 33.60. So I'm going to take 33.60. 33.6, and I'm going to multiply it times 70%, and I'm going to get 23.50. So my put needs to be at 23.50 or higher, or close to 23.50. Technically, I may be able to take the 22.50, but let's go to 80%, because that's an opening trade. Let's just say we're going to open, we'd go to 33.6. We'd do 80% of that, and we'd be all the way up at $27. So the $27 strike. So I'm going to roll this up. All right. So I'm over here. I want to be around 150 days. So I'm going to stay in this expiration cycle. And I'm going to take this. I'm going to roll it up to the 20. So I could go to anywhere between the 25 and the 27.50. I could choose either one of those. I'm going to go to the 27.50. It's kind of closer to the 80% of the current stock price. So I'm going to roll here. So I'm going to buy 27.50. So let's see here. I'm going to go ahead and right click here and put create rolling order. And I'm going to make sure that I stay within, let's just see here. So I'm going to sell this one. I'm going to buy the 27.50. I'm going to stay in the same expiration cycle, June. Okay. So I'm just rolling up. I'm not changing my expiration cycle. I'm going to pay for this. It's going to be a debit. But I'm going to move my put hedge closer to the money because it's not really protecting me. It's too far out. So mid price, I want to pay as little as possible. So I'll just see what the best price I can get for it. Okay, looks like it filled me there at mid price. Okay, so now I'm long this. So now my hedge is better. It's proper. It's closer to the money. It'll protect me better because you have to have your hedge. Your hedge is there to protect you. Okay, so now we have the hedge on. So we're just going to do kind of like the traditional wheel in the short term. So these options expire Friday. So I'm going to go ahead and sell a put out of the money. So we're at 33. Let's take 50. Okay, so we're coming into earnings, it looks like. As you can see, these things are elevated. I mean, this is a good pricing. How can we tell we're coming into earnings? Well, we can see our implied volatility, see how it's kind of lower, 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 and then bam, look at how big that one is. So you can tell there's something going on this week. Um, this particular implied volatility that I rolled, you might think, well, you just paid a whole bunch for your put, for your head. Not really. I mean, look at the implied volatility here. It's pretty normal. It's not really influenced much by what's happening in the near term like this. See how these are more influenced? These are kind of not really influenced. So I didn't really overpay. Okay. So here's the question. Am I going to buy this little $5 call that way out here? Or am I going to kind of like collect a lot more premium than normal and then maybe pay more than normal? It's kind of not really written in stone of what to do in this scenario. But what I'm going to do, let's see. I'm probably going to go far out. I'm just going to collect here at maybe at the 30.50, and then I'm probably just going to pay, like 20 bucks. As opposed to, only paying $5. I might get it a little bit closer. See all this premium that I'm collecting? Maybe I'll go to the 31. Let's say I go to the 31, I pay and I collect 60 bucks and I pay like 15 bucks for my long. That'd be pretty, that's pretty good premium that I'm collecting there. And it makes it a lot safer. I like to be safe, conservative. So I'm going to do that. And like I said, this is kind of a little bit discretionary. I mean, I don't have this situation written in stone. And I'm sure Will's in here. Yeah, he's in here. Yeah, I'm not sure what you're going to do, but let me know what you're going to do. So I'm going to go ahead and sell this one. I'm going to do one, okay, because I have between $5,000 and $10,000. So I'm going to do one, and then I'll do 3 put hedges, which I've already done. That's the sizing component. So bid price 67. Okay, so that filled, and now I'm going to go ahead and buy something for like 15, 20 bucks to protect my put hedge. Right here. Just one of those. I collected some premium there. And that's kind of a little bit discretionary of which one of these strikes do you really want to use. But 67 bucks minus 15, it's like 50 bucks in premium that I collected. So that's pretty good. I think normally you probably collect around $30 to $40 in premium. So, okay, so there we have Uber on. We have our wheel. Our wheel is in the short term, making us money. In the long term, we're protected, and we're not depreciating as fast as the near term. Okay, let's see. Now, if you're interested in the safe wheel flow chart, it tells you exactly what to do and when. I have that available, and also the 6 filters that I use for choosing the stock. So this is a system that did around 21% last year, and I'm only charging around under 100 bucks for the course. But again, I have to say, just because you buy the course doesn't mean you don't watch the videos. You need to watch these videos, and that'll help you. The course alone is not everything you need. You do need to watch a couple of these videos just to get a feel for how I'm doing this. Oh, and also, don't forget to follow me on Twitter at Carl Dom. There's a link in the description there. And hit the like button and notification bell. Okay, I'm going to get into the questions. Chad. Chad is somebody a lot of people send me like their trades. They send me their ideas and they want to bounce them off me. I mean, probably about once a week or maybe twice a week, people are emailing me saying, hey, I have this great trade system that works, blah, blah, blah. And it takes me about, 30 seconds to a minute to kind of say, you know what, it doesn't work and here's why. But Chad did the same thing, this guy Chad, and he's got a pretty good thing going on. I actually spent a lot of time on looking at what he was doing. So this guy Chad's pretty bright. And now he's saying, why not manage your trade on Fridays to avoid risk over the weekend? That's actually a really good idea. I don't know why I didn't think about that. I mean, I think I'm more just trying to get things done in the beginning of the week. I mean, that's really the only reason. But if I wanted to kind of, in essence, sacrifice my Friday mornings instead of sacrificing my Monday mornings, actually, that's really a good idea. And I would have to strongly consider doing that because I'd get more premium and also I'd be protected over the weekend. That's a really good idea. I can't think of any downside to that. The only downside I can think of is that, I'd probably prefer to sleep in on Fridays rather than sleeping in on Mondays. But hey, I might do that. Walter, you hear me? Thank you. Um, Brad, I'd love an earnings edge course. Yeah, I'm strongly considering that because I want to give my clients value and I want to give them the opportunity to make money. And I'm not saying you're not making money when you're in the alerts, you're just making less money because you're paying me every month. But if you can do it on your own, you have the ability to make more money than being in the alerts. I'm not saying I'm going to get rid of the alerts. I'm not saying the alerts might not be helpful, but the course I think would help a lot of people. Uma likes the idea, the course. Yes. Will, I've been waiting for something like your earnings edge course. That was also an idea I had in your comments in the past. Yeah, I've always been kind of shying away from recreating a course like that because people steal it, right? That's the problem. They steal it and then they beat me with their SEO, on Google. And then if someone punches into Google, they're the ones that makes a sale and they literally stole everything that I did, that's the reason why I don't do courses, but I'm still considering doing that. Some guy be interested in earnings edge course, cost permitting. Yes, and some guy, you're the one that emailed me, I believe, and pushed me towards the idea because of some of the things we talked about via email. I'd be interested in any advice on brokers, especially for those of us that can't open a TOS account. I'm in the UK. So a lot of people use interactive brokers. I don't really like them, but they're okay. If you're looking to get portfolio margin and you have over 300,000, not a lot of people do, but if you do, or 250,000, I would recommend Dash Prime. That's a broker that I use on the institutional side, and I like them. But you have to have a lot more money, so I don't know if you would be able to do that. But that is one alternative. I dealt with TradeStation for a short period of time. I don't know if they're available over there, and I can't remember how good they are. I kind of didn't like them right away, so maybe that's an alternative though. Will, the calls are cheaper today, but still none for $5. Yeah, you saw I went all the way down to the bottom of what was available down there. I couldn't get anything for $5, but I'm willing to pay. If I collect $60 or whatever, I'll pay 15. That's fine. That's what I did. Edwin, I'd sign up for the Earnings Edge course. Yeah, I figured there was some demand for that. Even when I was doing the alerts early on, I had a few people that just kept on and on asking me to make a course out of it, and I just kept saying no. They told me they'd pay me $3,000. And I'm like, yeah, okay, well, maybe that would be worth it, but I wouldn't put it that high. VIX Trader, interested in the Earnings Edge course or any options course, really? Yeah, so you have my safe wheel here. You've got my Premier Level 5. You're going to learn a lot from trading that Premier Level 5. I don't tell you everything, but you learn a lot. And if you're pretty savvy, you're going to learn enough to take that thing and make it your own. Will, I like following you, but planned on selling good premium and using 25% of that money for the call. Yeah, that's not a bad idea, making it a percentage, 25% of it for the call. I like the idea of doing that because that makes it more of a concrete rule. So that's something. What did I do? I paid like $15 out of 60. What is that? 15 divided by 60. Yeah, it's about 25%. There you go. I think I did that. Smith's echoing the desire for earnings edge course. Yeah, so I guess there is some demand for that. Brad, buy the course, get discount alerts. Maybe that's not a bad idea. That's a good model. Thanks for bringing that up. I don't know. I got to think about that. Walter, do course as a live stream for current subscribers. Don't post. What do you mean? Don't post it. I'm not sure how to keep it behind a paywall. I guess I could keep a live stream behind a paywall. But even if I do that, they're going to be able to steal it. If any way that I get you that information, they're going to come in as a customer and steal it. So in this specific week, IV, why not buying the call for next Friday? Same price and might use for 2 weeks. Oh yeah, that's not a bad idea. I think the reason is I just don't want to make things too complicated. I kind of want to stick to the rules. And you're talking about you can't even get it out next week for $5 for 2 weeks from now for $5. But I don't want to veer off rules. I like to keep the rules as simple as possible. And that would be the main reason why I wouldn't do that. Now, moving my trades to Friday morning, what do you guys think about that? Like, are you guys still available on Friday mornings, or am I going to lose half my people? You know, that's one of my questions. I'll give you guys a couple minutes maybe to answer that question. Let's see if there's anything else I want to talk about here. Not really. So, yeah, that's kind of something to think about. Maybe in Twitter, you can let me know. Some guy says Friday mornings work. I'll put out a little Twitter question. Have I found anyone promoting safe whales around? No, because I give it away for free. Well, I technically give it away for free because I give you everything right in front of you. Except for I do have a course in case you want to kind of get it easier, like you want to know everything in every possible scenario and you want it in front of you. But technically, I give it away for free, so I haven't seen anything as far as someone trying to give away my safe wheel. I don't know. Put it in Google. Maybe they are. It was good for Friday. More than a label good for Friday. Richard, Friday morning would be better, actually. Okay. They're okay for Friday. One thing I do like about Friday is that I will be able to actually sell that call. So I won't have to, I can sell it'll be early in the morning rather than waiting to the end of the day to sell it. But if it's in the money, I could sell it. Would a Friday open be something you backtest? No, I don't think that I need to backtest it. I think if I'm opening on Monday versus opening on Friday, I think the backtests are very correlated. I wouldn't think that there would be a major difference. Deep South, I like the Friday morning idea. Well, I'm going to strongly consider moving my live streams to Friday because of that fact of, why have risk over the weekend? That is one minor, could be major problem with the safe wheel is that, you could be holding that put hedge and nothing else. And the market could scream higher over the weekend or open up Monday morning super high. But of course, it could crash over the weekend, and that would actually be beneficial. But Friday might take more margin since the new position is open in the morning and the old one expires only after hours. I don't think the margin's going to be an issue. I've got a lot of room for margin. Advertise returns as less than 25%. People won't reply. You say the returns are less than 25%. No one's going to care, as long as I'm talking about, people want to double their money every 30 days, and if they can't do that, they're not going to buy it anyways. That makes sense. And on Friday's great. Schmidt's Friday is good. Okay, well, I will strongly consider that. It might take me a week or so to kind of figure out if I want to do that or not, but I'll definitely keep you guys posted. Okay, so I'm going to go ahead and shut down here, but I do want to say one thing. If the P&L is not real, what else are they trying to conceal? Oh, one more question here at the end. You may have an issue with the short put not getting assigned. Okay, I'm going to think about that as I end this broadcast and think of that. It could be a potential hang up.